Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies stock market experts are devising for all of you at this point in time. Let's start off with the recap. So the Nifty opened this week with a sharp reversal of the sentiment. It shook off Friday's slump to post a spirited recovery yesterday. In the first session of a holiday shortened week, we have seen that the index has clawed back all of the previous session's losses now. What happened overnight in the US Wall Street? We did see the indices close a tad lower as investors now await the July CPI data due later today in the US. The Dow Jones closed about 0.5% lower, 0.25% loss for S&P 500, and Nasdaq slipped by 0.3%. Now, what happened in the Asia markets this morning? We've actually seen the Nikkei 225 hit a record high level in Tuesday's session. Markets in China, South Korea, and Australia have also advanced after the US has extended the deadline on interim relief from tariffs on Chinese imports as well. So the Nikkei was trading 2.5% higher this morning at 42,887. The rest of them were also trading anywhere between 0.2% to 0.7% higher in trade. The Gift Nifty is also indicating a mild uptick in the trading session today. So let's see how this day also pans out in trade. But time to welcome our guest. We have Mr. Chakri Lokpriya, CEO of Equities at LGT Wealth, now joining in on this special program. With us. Warm welcome to you, Chakri. Good morning, and it's always good to speak to you about so many things that are happening right now, and you'll be able to give us a clear direction as to how are you looking at the markets. We've had tariff tantrums in the past. We haven't talked to you about it. Let's start off with that. The 50% tariff on India. What do you feel about it? The markets, do you think, are acting pretty mature, even if the tariff announcements are coming in at these high levels? And what do you think is going to be the larger impact if the talks do not break through, from these levels?
Good morning, Sakshi. Thanks for having me. These are very interesting times. India had expected it probably a 15% tariff and ended up now with a 50%. Now, if the 50% holds, then clearly there is roughly a 0.75% to 1% downside to the US economy. And several sectors like textiles, jewelry, leather, which employ hundreds of thousands of people, their exports become completely unviable to the US. So clearly there will be what you call a hit to not only to GDP, but also to the export markets. Third is, this whole story of China plus one that was promoted in the last year or so. That story is now will be gone if the 50% tariff remains in place. So now the situation is basically, and then therefore the earnings will slow down overall, and the markets will deliver probably very meager returns of 7-8% returns. So against the backdrop, now the hope is that if the August 15 meeting with Putin and Trump and goes well, and if US decides to bring back the tariff on India to 25%, then we'll see a reprieve.
Now, Chakri, when we talk about, that's the global overhang, and we'll have to continue to watch out for as to how things progress from here on. We are definitely keeping an eye out on all those meetings that you're, talking about. And it still seems like the Indian government is looking at more negotiations, more talks to happen that could somehow, create a breakthrough from these levels. But we'll keep an eye out on that and see how that progresses. Let's talk about, the domestic aspect as well. Largely, most of the earnings have come out. What has been your key takeaway here? We haven't seen, one particular sector really giving us that kind of an enthusiasm that we actually saw in the last quarter. It was IT that lifted the sentiment, but this time around, it all fell flat after the IT earnings came through. Even in the mid and the small caps, we are not seeing, very exuberant numbers coming in. What would be your top two takeaways from the earnings? Are there pockets of concern that you'd like to highlight from Q1?
You're right, Sakshi. In fact, the two takeaways are, one, earnings are slowing down and have slowed down to probably about 8% overall, 6-8%. And second is there is further downside possible in the next quarter if the tariff negotiations do not yield results, i.e., if the number does not come below at least to 25% is now the new normal. So therefore, I think one has to be cautious until we at least hit a 25% tariff level.
Okay. I also wanted to ask you if there has to be picked out some or the other pocket or a sector where you believe that in case globally things turn out to be better, which will be the sectors to first show us the signs of green shoots? What would those sectors be?
From an Indian perspective, I think it's industrials,
Industry.
because for the simple reason that given the tariff environment now, Indian government is likely to speed up its infrastructure spend and award more contracts for various activities that involve, and therefore EPC companies, industrial companies, railway companies, all those will be the primary beneficiaries.
Okay. I also wanted to ask you, meanwhile, just viewers keep an eye out on the pre-open trade. It's indicative of a higher opening at 24,654, 0.3% higher. We'll come back to it once the markets have settled in the pre-open at 908. Chakri, the recent correction, we've had 6 weeks of consolidation and a negative return on the Nifty. I wanted to ask you, has this recent correction made valuations in certain pockets attractive? Do you think this is a stock pickers market? And which pockets do you see as generating value amid all this volatility and dust still to settle in?
Amid all the volatility and uncertainty of the tariff final number, I think two, three things have stood out. One is within financial services, it is the PSU banks. State Bank of India numbers were really strong, and so were the other PSU banks. Second is within industrials, companies like Kalpataru delivered very strong numbers. L&T delivered good numbers. So this is an indication that the industrial sector is also doing well. So the valuations overall for the Nifty have indeed come down, and they've probably come down to about 20 odd times. So which means there is valuation comfort. Now what is required is an earnings acceleration that will come about only if the tariff settles at least, let's say, 25%.
Okay. So that will be something that the markets will be able to digest easily. Even though exporters did come out and say that even 25% was, not good, and 50% really indicates to no trade at all, or virtual stalling of the trade completely. So we'll keep that aspect also in mind. But when we're talking about valuations, I also wanted to understand from you, for our broader audiences, the connection between earnings growth and valuations. Are you still sensing a disconnect in few pockets? And having said that, are the last 6 months of this calendar year going to be in large caps?
Large cap generally have underperformed below their regular trend line of what returns have been in the last, let's say, 5 years. And that is largely because of we were waiting for from April, May, June, July, or now into August for 4 or 5 months for this tariff to uncertainty. Therefore, companies were not really undertaking any capex plans, not doing expansion plans. So the primary beneficiary is if we come down to, let's say, the 25% number, then one is IT, second is pharma among the global sectors, and the domestics clearly will be industrials and financial services.
Financial services. Okay. You did talk about also PSU banks showing us the path. I also wanted to ask you on the private sector banks. Yesterday also, the large part of recovery actually came in from HDFC Bank, Reliance, the banking names again, gave us that hint that, the bulls are back in action. But ICICI Bank was in focus for a whole lot of different reasons, for raising the minimum, balance requirement to 50,000 rupees for its urban centers and, metros as well. What's happening within the private sector banks right now? How are you looking at these changes that are occurring, and what will it really lead to? Do you think there could be also a negative impact, or is there a broad strategy for ICICI Bank behind, taking this large step? Any fresh entrant will have so many other banks to really choose from, in case, that there are younger people who do not even have their salaries, up to 50,000 rupees. So it's virtually very, very difficult for them to have a balance of 50,000 rupees in urban metros. So how do you really see that aspect really playing out, and what are the changes happening in private sector banks?
The action of ICICI will be to the benefit of HDFC Bank, Kotak Bank, and Axis Bank. And clearly, if ICICI continues on this path of minimum 50,000, then it will clearly lose some urban market share. Like you rightly pointed out, many salary accounts that ICICI targets, they may not, the employees may, I mean, the account holders may not be able to or wish to hold 50,000 in their account. So, which means, it's kind of perplexing. Well, it doesn't do really much to their financial, doesn't really change their financials. So, I think, but what one thing it will do is kind of reduce the growth rates for ICICI. So, I think it's worth waiting for their clarifications, but I think it will cut ICICI's growth.
Okay. Let me also ask you, when it comes to, we did talk about large caps. How are you analyzing even the mid and small caps, micro caps at this point in time? Are you still staying away from that pocket, given that there is a lot of uncertainty in the market? And if there is any negative, those pockets will again be the ones that will pull down the portfolios of a lot of retail investors. So, how are you approaching them, sir?
Now, here there's a dichotomy in terms of there are any lots of mid cap companies which are fairly large companies which a couple of $1 billion above in market cap whose actually earnings have been higher than that of the large cap. So those companies. On the other hand, the small cap companies have disappointed in their earnings. So I think kind of a mix between mid caps and large caps is the approach at least we are adopting. And small caps are still not being able to find their step in the right direction until things settle down.
Mm, okay, got that. When we talk about certain pockets, you also did mention about IT and pharma. I just wanted to ask you, for those having a near-term vision or a medium-term vision, do you think it's best to stay away from IT and pharma for at least the interim period?
I would think so, because we really now this has become a very political situation in terms of the outlook for these two sectors. Probably more for IT and less for pharma, because pharma still generic drugs, which India focuses on, are
Okay.
still a little bit away from the tariffs. I think still there's sufficient amount of time for negotiation, but IT will generally wait for the dust to settle down worldwide of the new normal of what will be the demand. So yes, the answer is we should be slightly underweight both IT as well as pharma.
Okay. We're also at the onset of the festive season from here on, which will stay till the end of the year. Festive season started off early also this year as well. What are those baskets or bouquet of spaces that one should be eyeing? Should it be consumption space, travel, tourism? Is it something that will follow from here on? What do you believe?
Consumption should pick up here on, for multiple reasons. Consumption has been weak. There has been an IT income tax reduction cut for in this year's budget, and that will spur some amount of the discretionary consumption, and therefore, but consumption again, there's pockets which are strong are like jewelry. Titan is a good name, and two-wheelers, like for instance, Hero Motor or Bajaj Corp. Uh, and even Maruti for that matter. I think autos and jewelry still look good in consumption.
Okay. We'll keep an eye out on autos and the jewelry spaces within the auto basket. Are you looking at two-wheelers or four-wheelers? What's happening with Tata Motors? What's your fresh view there after the numbers? And what would you really say when it comes to the two-wheeler sales that actually came in positive, more positive than the other four-wheeler names that came in the recent numbers? How would you see that?
Both Bajaj Auto as well as Hero Motor, they have the valuations on their side, and the volumes are beginning to pick up, and both and they're fairly well positioned that in terms of whatever the trend line to slightly above trend line volumes can be expected from these companies. So those are good names to have. On the other hand, Tata Motors is now a global play,
Yeah.
with the good 10% tariff between US and UK. Um, and so the Jaguar Land Rover will kind of benefit. Yes, the Jaguar Land Rover sales has kind of been a bit on the weaker side, but however, the overall valuations for Tata Motors is attractive.
Okay, overall valuation is still attractive for those looking at the long term there. So one can continue to look at it. Otherwise, yes, it's a global play and therefore the volatility could actually continue. Since we've been talking about valuations, a lot of volatility, uncertainty looming, how would you explain to us that what is the sense of your cash book? How much cash are you sitting on? And what is the philosophy at this point in time?
We remain more or less closely fully invested, probably about 2% cash-ish. For
Okay.
this for the reason that this is a very news-wise a very fast-flowing market, and both positive news and negative news happen, and these are largely very macro level news announcements of tariffs, announcements of punitive tariffs, etc. And so it is driven by a macro trade which impacts the micro fundamental stock picking. So therefore, we are fully invested.
Fully invested. Okay, got that. Let me just, let our viewers know how the markets have settled in the pre-open. You have a mild downtick, 24,263 or 563 odd levels can be seen, 0.09% of a dip right there. Let's also look at the Nifty Bank to see how that has settled in the pre-open trade. We have again a 1/10% of a fall here, almost a 70-point cut. Mid and small caps, let's look at that as well to see how the broader markets are shaping up. Although IT is showing us some green tick, mid caps slightly higher. Remember, these were the pockets that were also lower and under pressure even yesterday. 0.25% of an uptick on the small cap, so that could be in focus. Let's also look at the banking story, PSU banks that were leading from the front yesterday. That's also showing us a 0.2% uptick right now. Let me just highlight for you a few stocks. You could look at Tilak Nagar Industries, where the margins came in at a multi-quarter high. EBITDA improved by nearly 90% year on year. The stock is indicative of a sharp 8.5% uptake. But when we talk about the earnings reactions on the downside, you have Astral, that's indicative of a 5% downtick post results impact, and Bata also opening slightly on the softer side post earnings as well. Now, when we also pull up some of the other stocks, Office Space Solutions about indicating a 1% higher on the positive reaction, positive earnings that have come in. And Ashoka Buildcon also could be another one that could be opening higher. Another one that could be opening sharply up is Apex Frozen Foods, also indicating a strong move there after the earnings. There is also a block deal in the offing. Medi Assist is something that you could look at, viewers. Medi Assist is indicating of a 4% higher start. At 550 odd levels. This is after 15.7% equity has exchanged hands in the block deal. And that could be in focus as well. But from the metals pack on the downside, we could actually see Hindalco on the lower end, about 2% lower. That's because the Novelis EBITDA per ton is below estimates, and that's a clear reflection that we are seeing. So the metal stocks are coming in at some dip at this point in time. Important ex-dividend stocks today are ICICI Bank and Grasim Industries. So keep that in mind as well in case you have these stocks in your portfolio. So look at that as well. Those are some of the stocks that I just wanted to highlight that you could definitely keep a radar on as well. Coming back to Chakri. Chakri, how are you looking at some of the commodity plays, oil and gas, OMC stocks after the government has provided that support, even though most of the analysts did say that, the under recoveries are much higher than what is being compensated by the government, but there is still no clarity if some more compensation will take place in the offing. How would you look at that for OMCs?
For the OMCs, I think clearly in the current situation with oil prices fluctuating a lot and the source of oil also where they buy from and what kind of discount they get is going to make a big difference to their overall margins. And also, given that they did, so therefore this under recoveries are likely to continue. And also they will be subject to some amount of forex volatility. So given the situation, I think best to stay away from OMCs. On the other hand, a company like Reliance Industries, I think, is far better placed in the oil and gas space.
Okay, let's also welcome on board Arpit Beriwal, analyst of derivatives at Motilal Oswal Financial Services. Arpit, warm welcome. Good morning to you. Before the markets open, if you could quickly share with us two stock ideas that our viewers can keep an eye out on.
So very good morning to all. So the first idea would be from the new age itself, Eternal Zomato. So a classical strong technical pattern on the monthly time frame. Daily scale, it has given a falling supply trend line breakout. So Eternal looks good for 4 to 5% up move from current level. Second would be from the PSU pack, Indian Bank. So a classical range breakout on the monthly and the weekly scale, pole and flag breakout. So definitely from here on also, Indian Bank can head towards to next to 6 to 8% on the upside. So Indian Bank and Airtel would be our two picks for the day and for the coming week also.
Fair point. Indian Bank, something that even Vaishali pointed out yesterday. You have a second vote of confidence from another technical expert today. And now you have Eternal on top of your radar. The stock had jumped up in the last 1 hour of trade yesterday. So that's something that we can definitely keep an eye out on. So the markets have opened. Let's quickly look at how the Nifty is opening and how are some of the other moving parts also indicating before we come to both Chakri and Arpit to discuss more about the markets as well. Let's quickly look at the Nifty. 1/10% lower, 24,550 is where we are at. So a mild downtick start for the Nifty right now. Let me just pull up, the Nifty Bank as well to see how the banking space is now moving. Remember, that was also indicative of a mild positive start, but let's see how it goes. No, 0.5% lower, 262 points of a cut, 55,248 now being seen for the Nifty Bank as well. Mid caps flat with a negative bias at this point in time. Let's also look at the small caps. That's where some green can actually be seen, 2/10% higher for the small cap index, and that's where some action is being seen. Broadly, it's the advances that are at 1122 on the NSE vis-a-vis a 546 decline, which actually indicates that the broader markets breadth is towards the positive side at this point in time. And even on the BSE, advances are 796 to 497 decline. So the advances side is definitely positive. Although the big drags on the Nifty that's keeping a lid on is HDFC Bank that provided the support yesterday towards the end. That's down by 0.6%. Kotak Mahindra Bank is down 0.5%. SBI Life is down 0.5%. These are the top drags at this point in time within the banking space. You also see ICICI Bank and Kotak Mahindra Bank all lower in trade. What's ticking higher? IT. Wipro is up in trade. You also have names like L&T that's higher. Sun Pharma is also moving up in trade. IndusInd Bank, Hero, M&M, Tech Mahindra. These are all the names which are taking off on the positive side as far as the Nifty movers are concerned right in the morning trade. But some pharma names again coming under pressure. Large ones are Dr. Reddy's, and we also have some smaller names like Praj Industries. Look at that, 8% down in trade. So some of top losers right in the beginning of the trading session that we can spot now at 409 odd levels over there, almost an 8% cut coming in for Praj. But apart from that, of course, we are looking at the results impact. Astral Poly, we had indicated it's opening about 3.8% lower in trade. Hindalco, because of the Novelis impact, 1.5% lower. We are also looking at, let's pull up the Lucknow Industries to see how that one is opening, because NSDL shares are higher by about 3.5%, again on another positive day, right ahead of the results coming in, remember, for NSDL. So that will be an important one to look at. Tilak Nagar Industries, meanwhile, coming on your screen, 7% higher. L&T, 0.5% up in trade. Quickly, if you could tell us, Arpit, how do you see the opening for the markets? What would you do in this market?
So actually, if we talk about Nifty first, Nifty, if you look at the technical structure from last 6 to 7 weeks, it has been forming lower highs. And interesting, from last couple of days, Nifty had got stuck in between 24,350 to 24,600 levels. And coincidentally, if we see, that is near its above its 100 demo, also near above that. So looking at the chart setup wise, definitely Friday we have seen a selling. Yesterday we've seen again recovery. So today on the immediate basis, 24,650 is the level that we are looking out for on Nifty on a hourly basis. If Nifty is managed to sustain about 24,650 levels, then we can see some momentum on the higher side towards 24,750 levels. Or till that time, the index is likely to be in a range between 24,450 to 24,650 levels. So on immediate basis, 24,650 is a major level for Nifty to watch out for. Sustain is above that, can he see some pullback in the index. Along with, if you talk about Bank Nifty, so Bank Nifty nature has been relatively subdued because of the heavyweights that are underperforming. where the PSU banks are outperforming, but the heavyweights, the private banks are underperforming. So Bank Nifty, we are closely watching 55,555 level to watch out for. A hold above 55,555 will definitely can propel the index to high levels, but till that time, index is likely to be in a range between 55,000 to 55,555 zones going forward.
Okay, let me just go across to Chakri now. Chakri, I wanted to discuss with you on one stock, that's PG Electroplast. Maybe even Arpit, you can also tell me about what you think about it. The stock is now up 3% odd. This is after 3 days of declines that we've already seen on the stock. Sharp fall of over 35% odd had been seen. Remember, this came in after PG Electroplast had highlighted from the company's point of view that they are reducing the growth forecast on both revenues and profits for the current fiscal year by a sharp markdown as well. Chakri, how are you looking at this EMS play? What the management is of the view, and how the earnings came in, and how should investors really look at it?
I think this is more a company specific one because it's like this company probably has a more consumer facing focus, and so that is kind of reflected if you look at it's a somewhat related event which happened in the case of Voltus. Voltus also had weak numbers, so which means the components supplied by the PG Electroplast reflects that one, and therefore it is more a company specific thing, but probably the stock fell quite a lot because it's partly seasonal what happened, the weakness.
Okay. Arpit, would you take this as the first, sign of a positive recovery as a trading bet on PG Electroplast?
So generally, we have seen in the past whenever the stock corrects more than 30 to 35% in just couple of days. So generally, the intensity of selling is quite high. Definitely, from yesterday onwards, we have seen some pullback from the lower levels, but I think we will still wait for any major trigger. So 555 is the important level. Until that time, the stock doesn't surpass. It will better to wait because generally such counters have high volatility because the stock corrected from 800 to 500 levels in just matter of days. So we wait out for any more stability, and once the stock stables, then only we'll take a fresh view on the stock going forward.
Okay, got that. Right now, there is a 5.5% uptick. Let's see how it progresses going forward from here. Remember, in the last few days alone, we had lost about 35% on the stock. Okay, Chakri, Arpit started off by saying that he's betting big on Eternal. I wanted to take your view on the entire new age tech basket. Post the earnings, where are you positive on, and have you added any other stock, to your watch list or to your clients' portfolios beyond, say, an Eternal that has been a consensus buy for a lot of analysts? How are you looking at Paytm now? How are you looking at PB FinTech, delivery for that matter? Have also signs improved for a Nykaa for that matter? How are you looking at the other ones beyond Zomato?
I think if you look at the new age companies, one of the good things that's going for them is they are all domestically focused. So in the age of tariffs, they'll be far more protected. Now, in the case of Zomato, Eternal, they have actually delivered good numbers. They improved a lot from their previous things, and we do in fact hold Eternal as well. And I think the company is well positioned from all these factors, and the similar story will case apply in some of the other new age companies also, because of their domestic facing focus and the growth runways. Anyway, the longer story is intact. Short term also, I think there is a trade to be made.
Mm. Okay, so that's the new age tech stocks as well that we can definitely look at. I also wanted to ask you on the recent IPOs that have come in, some newer ones that are hitting the D Street, and what is your fresh approach onto them? So NSTL came in last week. What's your thought on that? We had earlier, I think, discussed CDSL vis-a-vis NSTL as well. But now, even beyond that, we have a JSW Cement that's coming from a marquee player, marquee group. We also have Bluestone Jewelry that's now open as well. Anything interesting that's caught your attention in the recent IPOs, and where do you feel confident of placing fresh bets?
I think JSW Cement, the company has made a strong foray. It's managing its growth very well. It's leveraging upon its existing infrastructure to set up the new distribution centers across the country, which is very vital in the cement industry. And the cement industry in itself has become it's consolidating very fast. You have two big players, and now JSW also has the balance sheet to become a big player, and it'll also, I think, become a little bit more acquisitive, and therefore, that's worth looking out for.
That's worth looking out for. Okay. Anything within defense, railways, Chakri? I'm asking you because we have to let you go fast, and then Arpit can stay on and we can discuss a little bit more with him. So this defense and railway pocket, are there any fresh signs? Are they only into a consolidative phase? Are they away from your watch list? What is your fresh approach here?
Well, weakness in Titagar wagons today because of, there was a miss of numbers. But that miss of numbers was largely only a production shift. So whatever they couldn't deliver this quarter, they'll deliver next quarter. And both railways and defense clearly are worth holding on to, and clearly their outlook is very strong.
Okay, got that. Anything within the Adani Group stocks at all, Chakri, that you're looking at as any fresh sign?
Adani Ports, very good numbers. A company which can grow numbers at 16-20% plus, indicates the strength of the underlying business. And also it has become a market leader now, and therefore, all the business, it's a primary indicator of how export-import business will look. And therefore, and also valuations are fairly decent.
Okay, got that. Let me ask Arpit also. Arpit, did you see any, trading bet kind of signs within the Adani Group stocks or defense and railways that we just discussed with Chakri?
So actually, if we talk about first Adani Group, generally Adani Port has been on the most strong counter within the entire Adani Group as a whole. So definitely in last couple of weeks, the stock has corrected from higher levels from 1500 to almost 1300 levels. But the good part is that it is back to its support zone where the stock rallied from 1300 odd levels, and the stock is now hovering near its 200 DEMA. So I think from a positional perspective, definitely Adani Port offers a good opportunity from a medium term to long term trading perspective, with major support around 1300 for an upside move towards 1400, 1450 levels. Talking about defense, so as of now, if we look at the overall chart structure of defense, still selective pockets are underperforming. And looking at the sector specific, so as of now, there is no major reversal seen from a trading perspective. So I would suggest that better to wait, and as there are better opportunities available in the other sectors, so try to play out with that. Talking about the railway as a whole, our say would be that better to wait because railway has been the most underperforming sector. Though today we have seen some uptick, but definitely we would be refraining from adding any positions in the railway sector. Coming back to the defense, definitely if we can get some dip on the counter such as BEL, one that counter that looks relatively better within the defense pack, that would be the counter to watch out for. That can be added from a positional perspective, but not from an immediate basis. We'll wait for better opportunities within the defense and the railway sector.
Okay. Chakri, towards the end, we are actually looking at some recovery take place in the markets now. 24,600 and beyond kind of levels are being seen on the Nifty. Do you, would you be able to call out for us what exactly is the level at which we end this year with on the Nifty?
If the Trump tariff comes down to, let's say, 25%, then I think the markets can end up at least 5-7% higher from where we are today to end the year with an 8-10% gain. So I think so that's the key, which is the Trump tariff number.
Okay, Trump tariff is the key watch or the trigger to really look at how the Nifty progresses from here. Chakri, it's always such a pleasure to speak to you and get all those insights. So hope you have a fantastic time. We'll see you soon.
Thank you so much.
Thank you. Arpit, now let's look at some of the technical bets that we can probably spot for all our viewers. Now we are near to the first 15 minutes of a candle being formed, and we are seeing a recovery from the lower end on the Nifty bank as well. There is some swift recovery that's taking place. Any fresh ideas that you have on your mind?
So there are a couple of ideas. So actually, one good part is that yesterday we have seen some broader market buying interest in selective sectors. So one would be from the capital space, capital goods, that is L&T. So where we have seen a lot of underperformance in the large cap counters, L&T post its result has seen a very strong rally. Post that from last 7 to 8 days, it was consolidating between 3550 to 36 and 3700 levels. But today it has again a range breakout above 3600 levels. And I think definitely the stock can head towards 3800, 3850 3850 positionally. So L&T looks good from here on with a support near around 3600. While apart from that, another would be a favorite pick that was from the aviation, that is Indigo, where the mid cap and the small cap indexes corrected in last couple of weeks. Indigo was resilient, hovering above its 50 demo from last almost 2 to 3 weeks, trading in a range between 5800 to 5900. And I think closing above 5900 can definitely give a range breakout on the Indigo for new life high territories. So I think Indigo also slowly steadily can head towards 6000, 6100 from a positional perspective. So L&T and Indigo looks good from a more of a trading bet going forward.
Okay, since you talk about Indigo, I was discussing with Chakri also any fresh tourism ideas. Is that something that you're also betting big on? The second half of the year usually sees a lot of travel, a lot of consumption that pays. There are so many festivals, people keep traveling for that as well. Hotels space as well. We've been seeing a lot of smaller hotels buzzing off late. Yatra Online is something that's been consistently up for the last couple of sessions and smartly so. How are you looking at this entire tourism, travel, hospitality space, and what would you pick out for us?
So definitely tourism as a whole, you have to see into a number of sections. One would be from the hotel space, second would be from the aviation, and third would be more of a traveling perspective. So if you talk about the Indigo that we already discussed, second would be talking about from the overall hotel space. So if you look at the overall chart structure of selective hotels such as Lemon Tree. So for example, Lemon Tree post its result, the stock definitely moved towards 160 levels, and in last couple of weeks the stock has again corrected. But the good part is that it's back to its previous support zone around 140, 142 levels. So from a risk reward perspective, from a view time frame of 2 to 3 month perspective, definitely the stock is in uptrend, and it can slowly steadily head back towards to 160, 170 levels from next to 2 to 3 months perspective. Along with that, as you rightly talk about the Yatra and the traveling platforms. So as we already discussed, the Ikigo, that stock is in strong uptrend. On the daily scale also, it is moving in a band between 230 to 242 levels. And if we talk about overall the sector wise, definitely there's some uptick. One counter that is Lay Travens Technology. That is also from the similar space if we talk about. And looking at the chart structure wise, definitely a base is formed near 225, 230 levels, and slowly, steadily the stock can head towards 250, 260. So I think as a whole, from a tourism perspective, we have to pick a basket of 3 to 4 counters, and that would be definitely better. And going forward from 2 to 3 months perspective, we can see good uptake in these counters.
Fair point. I hope this has also given you some understanding as to how to go about it. Let me now just talk about a few more other pockets that we can discuss with Arpit now. The first 15 minutes candle is formed and we are seeing an improving breadth. Although the Nifty Bank is the one that's still in the red and we have to see how that one comes up. But a lot of spaces are pulled up. Look at IT, for instance. IT sector is up by 0.8, 0.9% odd. That's the one that's definitely giving wings to this recovery. We are also looking at even the mid-cap IT space doing well at this point in time. Do you think IT space, Arpit, has been in an oversold zone? Is this the right time to again look at IT? Because, the tariff overhang still continues. We still do not have clarity on that front. And IT, because even though there is on the services industry, there is no direct tariff, but it's just like how the business sentiment changes there because of these fresh policies. What's the kind of outlook that the clients for our IT companies really take is something that could have an impact. But because this space has been down from the last 3, 4, 5 weeks continuously, how would you look at it?
Sakshi, so interestingly, IT index has been one of the most underperforming sector, and especially the pain has been seen in the IT index in the last couple of weeks to months time frame. And
Yeah.
again and again, we have seen there has been some bounces. Then the next there's again a falling pressure, and the stock fell further. However, if we talk about current condition, if Nifty IT as a whole, so rather than betting on the large cap IT, would better prefer on the mid cap IT. And over here, the one counter that looks very relatively better that is E-Clerks. So if we talk about the chart structure of E-Clerks, where the IT index has been underperforming for the last couple of months, this counter has been strong trending on the monthly time frame, forming higher rise, higher low structure on the monthly scale. A fresh range breakout has been seen above 3800, 3900 levels, and I think definitely as soon as we see recovery in the IT index, this stock is likely to lead. So I think we have to stick to very selective pockets within the IT pack, and we have to be very much selective. So E-Clerks looks good positionally with stop loss around 3900 for a upside move towards 4200, 4400 levels positionally.
Okay. Let me just quickly ask you on some of the other pockets as well. I wanted to discuss with you specifically when it comes to the commodities plays. Is something that I wanted to discuss. Metals, oil and gas. How are you looking at these stories play up? Arpit, anything to look for us?
If I talk about metal as a whole, metal from last couple of weeks has been gone in a sideways zone, and this has been the nature of the market. A lot of index has sectors have gone in a sideways. So from the metal pack, as of now, looking at the chart set wise, specifically, they have all the stocks mainly JSW Steel, Jindal Steel are trading in a band. So I think looking at the setup wise, nothing much more promising can be seen. If we talk about Nifty Energy Index, so let me pull out the chart of Reliance Industries. So I think last week also when we discussed about Reliance Industry, our sense was that the stock is likely to be a range bound. But interestingly now it's at its 200 DEMA, and that is at the lower band of the channel. If we talk about Reliance, the stock corrected from 1500 to almost 1350 levels in last 2 to 3 weeks, and now the stock is forming a good base formation near its 200 DEMA. So I think from a Nifty heavyweight also, Reliance definitely offers a better opportunity with smaller risk reward. 1360 would be a major support. On the upside, 1420, 1440 levels can be seen. So I think Reliance looks good. Apart from that, metal and energy counters still are sideways, so nothing much more promising can be seen in the charts right now.
Okay, fair point. I hope this has also helped you out in getting a clear view there. Okay, if I have to ask you, Arpit, is there any pocket that you are completely avoiding at this point in time? Then what is that pocket where you think the charts are also indicating to a negative move? There is no strength in the fundamentals as well, and you know this space could actually get into a trap for a lot of retail investors. Which is that pocket?
So it's actually from last couple of weeks we have been talking about that also, and we have discussed also railway as a sector. So whenever we have talked about railway, apart from very few counters, all other counters has been in downtrend. Whether we have seen good recovery in the market from 22,000 to almost 25,500 levels in Nifty in last 3 to 4 months, but this sector has relatively underperformed. And going forward, also our sense is that this sector is likely to underperform because we haven't seen much recovery. So our suggestion would be that from next 3 to 6 months perspective, it's better to avoid, try to catch the dead can bounce in these counters, because generally the bigger trend of the stocks are in weak. So better to avoid this counter space as a whole. And because there are many other sectors that are looking very much better, so I think railway would be a sector better to avoid on going forward also from a 3 to 6 months perspective.
Okay, fair point. I hope this has also given some clarity to all our viewers there. Let me just now reiterate for all our viewers some of the other stocks that we can actually discuss. What we haven't discussed with you is pharma. Arpit, let's discuss on the pharma space what's really happening. We've been seeing off late last couple of weeks or so a lot of interest in the hospital related stocks. Again, that remains as a domestic story, untouched by tariffs. Do you also believe healthcare space is a better one to really look at amidst all the pharma space, be it the diagnostic chains, the front OEM players, but hospital stocks, they are largely immune to the tariffs, and therefore is it a good story to look at?
Definitely, and if we see whether pharma index has been a range bound, the healthcare sector as a whole or the majority of the stocks has seen a very good rally in last almost 2 to 3 months, where the tariff fever is already going on. But stocks such as Fortis, Max Healthcare has seen a very stupendous rally. And look at the chart specific wise also, there is still more rally left, especially counters such as Fortis or Max Healthcare. So look at the chart specific, both are technically strong. Fortis has been strong uptrend, and the base of the stock is shifting drifting higher. This is just matter of time that we can see 4-digit figure in Fortis in next couple of months going forward. Second would be Max Healthcare. So the stock is trading in a range from on the weekly from last couple of weeks. But the good part is that it is holding at high levels with major base around 1200 levels. So I think definitely going forward also the outperformance can be seen, and Fortis and Max Healthcare are top picks within the healthcare space going forward, and definitely the outperformance can be seen going forward.
Okay, got that. So one can definitely look at that. Let's shift focus now and look at some of the other stocks. I had marked out just briefly Praj Industries right in the morning trade today, once the markets opened, that the stock had swiftly slipped about 9% in trade to hit a 52-week low also today. Remember, this is after the Q1 profit for the company has tanked 94% for the company. That's impacted by the cautious ethanol market participants and geopolitical uncertainties. Despite the revenue decline, the company secured developments like IRA approval and SAF plant engineering orders, even though we are now seeing a sharp reaction come in on the earnings front for this one. Now, this is one stock, Arpit, you remember, has always been seen as a proxy stock, a stock that continues to be on a lot of traders and even fundamentals radar, fundamental experts radar as well. But the earnings have dealt a sharp blow here. The uncertainties globally again are keeping the stocks subdued. Look at it, the last 6 months I've also seen a 26% drop on the stock. Last 1 year the stock has dropped by 41%. What's happening with Praj? For those who have the stock in their portfolio, what should they do?
So interestingly, where the broader market bull run started in October 23 onwards, since then we have seen a lot of stocks that have double up, triple up, or it has gone 10x. But post that, a lot of stocks has corrected also from high levels. And if you look at the chart structure of Praj Industries, so it made a high in the month of January 25 around 800 levels, and since then the stock has almost corrected towards 400 levels. So interestingly, on the monthly chart, where the rally started around 380, 400 is the next best support for this counter. And I think on the monthly setup, definitely the stock is given a breakdown. But from a long-term players, 350 to 400 would be a major demand zone where the stock started its rally way back in July 23. So that would be an interesting point to look out for. From immediate trading perspective, there is no major reversal on the chart on the daily, on the weekly time frame. So better to avoid from any trading perspective. From a long-term play and investment perspective, 350 to 380 would be a major demand zone. Till the stocks holds above that, we can see some stability over there, but better to avoid as of now from any trading perspective.
Okay, fair point. I hope this is something that definitely investors can also keep one eye out on. But the stock that has risen post earnings today is Tilak Nagar Industries. Sharp momentum that actually has been seen on this one post the Q1 numbers that have come in for the company. And we've actually seen this stock company report 121% jump in its net profit at 88 crores for first quarter. And revenue from operations jumped by 30%, EBITDA zoomed by 90%, margins widened by 700 basis points to 23.1% compared to 16% in the last year same quarter, and that's really led to a lot of momentum. So first Tilak Nagar Industries, and then a sector wide liquor space kind of a view that you could share.
First, talk about Telangana Industries. We have seen a very good rally from 18 July from 350 levels to almost 500 levels. And post that, in last couple of days, the entire July series, the stock has been trading in a broader range between 470 to 550 levels. So today, after a gap up opening, the good part is the stock is holding at high levels. And I think technically from the time frame analysis, definitely the stock is in strong uptrend. A closing above 5110, 5110 levels will definitely open the momentum towards 550 levels positionally. So I think chart setup wise, it's very strong. After a gap up, it's important to watch out for and also if whether it's able to hold it gains. But looking at the chart specific, 480 is the major support. A closing above 510 can definitely extend the momentum towards 550 levels. Now talking about the overall liquor space. So interestingly, where the large cap players are underperforming, such as United Spirits and UBLs of the world, but the mid cap players are definitely outperforming. And if you talk about chart structures such as Radico Khaitan, where the space has been in bit of jittery, but Radico Khaitan technically has been of very strong uptrend on the monthly scale. forming higher rise high lows from last almost 4 to 5 months. On the weekly also it retested its previous breakout zone and slowly the head towards near its life high territory. So I think it's more of a stock picking and mainly between the mid cap space and the small cap space you have to look out for. So I think Radico also looks very strong and slowly the stock can head towards 3000 plus levels going forward.
Okay, got that. I hope this has also given a lot of understanding to viewers who keep an eye out on the liquor space stocks as well. Let me now look at auto space. I'll just take an overview there. And why am I bringing our attention here is because on Hyundai, the recently listed stock, auto stock in the same sector, Goldman Sachs has actually come out with a report. They have initiated their coverage on Hyundai Motors. This is despite the stock has fallen in last 3 out of last 4 sessions. Goldman Sachs has given a buy rating and a target price of 2,600 rupees per share, implying about a 20-21% uptick from the current levels. The stock, in fact, Goldman Sachs target is the highest on the street for Hyundai Motors as well. And they do believe the company is well positioned to outpace peers more visibly from FY27 to FY28, driven by EV models, market share gains in emerging markets as well. They also expect Hyundai to benefit from upcoming product launches, driving a 120 basis points market share increase between FY25 to FY28. And they also believe Hyundai Motor to deliver 8% forward 3-year volume CAGR growth compared to domestic car industry that's estimated to grow at 5.3% on a compounded annual growth rate perspective. So that's something that is, auguring well for Goldman Sachs, and it's looking at the stock positively. Let's now try and understand. The stock has reacted positively to this brokerage report, but let's understand on Hyundai. And let's also understand on the overall auto space and the top choices that Arpit also has there. Arpit, I know limited data for you historically, but what would you say from what we have last 6 months, 1 year?
So first of all, Hyundai Motor, an interesting chart pattern. We have seen a breakout in the June series above 1920 levels, and since then we have seen good move towards 2200. From last couple of weeks, almost from last 6 to 7 weeks, the stock was trading in a band between 2050 to 2200. But the good part is that in spite of market weakness, the stock was holding on to its gains. Today we have seen a gap up opening, and the good, interestingly, definitely the stock is near life high territories. So chart setup wise definitely indicates closing above 2200 can trigger a new momentum towards 2300. 2400. So setup wise, it's a very strong counter with major support around 2050 for an upside move towards 2400. Apart from that, if you look at the overall auto pack, we have been very much selective, and especially if you talk about counters such as M&M, where the entire auto index has been more of a jittery. M&M has been a very strong counter, though it is consolidating on the weekly and the monthly time frame for last couple of days. But the good part is that it is consolidated as life high territories, and I think slowly steadily the stock can head towards 3300, 3400 going forward. So M&M would be a one preferred pick from the auto pack. Along with that, second would be Hero MotoCorp. So Hero MotoCorp generally, technically it gave a weekly range breakout above 4400, and post that the stock was consolidating. It retested its previous breakout zone near 4500 levels, and the stock is up. So I think risk reward is quite favorable. Slowly steady the stock can head towards 5000 levels for Hero MotoCorp. So I think apart from Hyundai, second would be M&M, and Hero MotoCorp would be a preferred pick within the auto basket.
A sharp spike on Hyundai Motor, 3% higher at the day's high level as we were speaking about it. And you're also looking at the other stocks that have been highlighted by Arpit. All right, Arpit, we'll leave you at that. Thank you so much for being with us in the morning edition, sharing with us all your views on the markets and, of course, what to expect going forward from here. Not a bad start is what we say for Tuesday, 24,655 right now. The only, thought will be that whether this will continue to stay on course for the rest of the trading session as well. 0.25% uptick for the Nifty, and we're also looking at improvement coming in on the broader markets, mid and small caps. IT space has definitely been on the gaining ground. Wipro, Tech Mahindra kind of stocks are moving positive. Titan is up by about 1.5% among the Nifty gainers as well. You also have Hero Moto that's been talked about by Arpit as well as Chakri, who talked about it. M&M, Hyundai Motor, these are all the stocks that are now buzzing in trade. Remember, we've discussed this just at the moment when we are seeing now after our discussion, the stocks get into a clear buzz at this point in time as well. Let me just quickly look at the Nifty Bank. That's also recovered quite a bit from the day's low, about 0.4% or from the day's low, but still in the red zone at this point in time for the Nifty Bank as of now. But overall, the things look positive. Look at Reliance Industry. That's another one that's definitely contributing on the positive side for the markets, a percent higher for Reliance Industries. So Reliance and IT stocks, some of those auto names, these are the ones that are clearly contributing to the gains in the market. We'll leave you at that, viewers, but do stay tuned on to Business Today Television. Throughout the course of the day, you will get to see earnings conversations. You'll also see, markets coverage continuing. And of course, at 12 noon, we answer daily calls queries, all the stock queries that you have regarding your stock portfolio with Anshul Jain of Lakshmi Sri Investments joining in at 12 noon. So stay tuned for that. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, the show that answers all your stock-related queries on the program. In case you are here for the first time, but the WhatsApp number is flashing on your screens. This is where you send me all the questions that you have regarding the stocks in your portfolio, and you can also send